Okay, welcome to this video once again. This is your guy Sabane from Crypto Puncher. So in this video we'll be looking at how to set up trade on futures. In our last video we looked at spot trading, but in this video tutorial we'll be looking at futures trading. So this is Mexc exchange. Almost all the exchanges share similar interface. So when you open your Mexc exchange or Binance, you will see futures where it is written. So you click on it, you click on futures. When it opens, this is how the interface looks like in all the exchanges. So you will see open, which is longing a position that you are trading that this coin is going up. Then you will see open short also, that you are predicting that the market is going down, is selling. So remember I told you about limit and market order in the spot video. So they share similar interface also. This is the order book for shorting positions for those who are trading that this coin is going down, and this is order book for long positions, and this is the market fair price, the current price. So these are the basic things you need to know when you open the futures interface on your exchange. So how do you get started? You need to fund your futures account. So what you do, already you're supposed to have USDT in your wallet. So what you do is you click on this place, go to this place, click on it. So once it opens, you will select. So I already have some USDT in my spot account. So what you do is, let me select all, then click on transfer. So let's go and trade. So my USDT is already in my futures account. So let's get started. So the basic things you need to know is what we mean by isolated margin. What we mean by isolated margin, there are two types of margins. We have what we call isolated, and we have what is called cross margin. We have the isolated margin, and we have the cross margin. So let me explain what this means. So what this simply means is this: isolated margin means that you are trading only with you're entering a trade with only your margin. So if you are losing your margin. If you are profiting, you are profiting based on your margin. Even if you have $1,000, for instance, I have $50 here. If I'm entering this trade with, let's say I am entering this trade, I want to enter this trade at $2. Remember what I told you in our last video about limit order? Limit order is where you choose your determined price. You don't want to enter at the current market price. You are choosing your own preferred price. So I want to enter this trade at $2. Then I'm using 10% of my portfolio. I want to use 10%. So 10% of my $50, you can see it here. My margin is 4.8192. and you can see my liquidation price. You can see my liquidation price here. This is my liquidation price. It means that whenever if I enter this trade and it triggers and begins to trade, if this coin gets to 1.8, I will lose this trade. I will lose my margin, and I will also lose everything about remaining. This my $50. What will be my loss is this 4.8. So I am not going to lose entirely this $50. So that is isolated margin. So in isolated margin, the only thing I can lose is this my margin. I cannot lose the entirety of this $50. So that is isolated margin. So then let's look at cross margin. In cross margin, what happens is that you enter a trade, and then if you are benefiting based on your margin. While your, for instance, if I decide to enter this trade on cross margin, you can see the cross here, you can see the cross margin here, then you can see the same margin I'm using, 4.8. Now discover one thing: in isolated margin I had liquidation of 1 point something dollars, but here I have 0 liquidation price. So this is one of the good things about cross margin, and using at least 5% of your portfolio, 5 to 10% of your portfolio. So I have 0 liquidation price. So it means that if I'm losing in cross margin, you are losing both your margin and the leftover you have in your futures. So everything you have in your futures is serving in your futures account is serving as a backup for your margin. So if you are losing, you are losing with it. So if I'm liquidated on this $4.8, that means I'm also losing the entirety of this 50 USDT. Not instantly. The remaining USDT left after this 4.8 will be serving as a backup. For me not to be liquidated. So that is the good thing about cross margin. So let me go back. Let's go back. So you can use isolated margin, you can use cross margin. Basically I trade with both, but I love cross margin because of the risk management involved. It's always give me opportunity to have little or 0 liquidation price. So that is it. So another important thing to note is the leverage. If it is in forex, it can be equated to your lot size. So this is multiplier of your margin, what your margin will be multiplied with. So you have some exchanges have up to 200, 250, but it is very, very good that you use low leverage. The higher the leverage, the higher your profit and the higher your chances of losing. So it is better you use a low leverage. Use a low leverage. So it is very, very important. Use low leverage. So I have explained limit order in our previous video, so we wouldn't go much into that. So basically what you do is this: when you have a setup, you select, this is your percentage loader, where you select the percentage of the USDT you want to trade with, where you trade the percentage of the USDT you want to trade with. For instance, let me give us a sample. If I want to enter thrice, this is your chart, this is where you see your chart. You can also, for a broader view of your chart, you can also click here to get a broader view. In fact, let's click on that. I click on it. So let me analyze the market. Let's look at the market and then give a sample trade there. So as you can see, thrice is already is sitting on a support level. It has retraced so much. If not for the sake of BTC, thrice should be kicking off from here. Sorry, let's go back. Thrice should be taking off from here. You can see it. So you can analyze. I always use 1 hour, 4 hours, 1 day, 1 week. So you can make analysis based on these factors. So let me give us a sample of, so if I want to enter thrice, then let me enter with, I will encourage you always use at least 5% of your portfolio. Always use 5%. This is a secret and it helps you in risk management. You won't be liquidated easily. No matter, even if you have $1,000, always make use of 5 5%, at least, at most 5% of your portfolio. So let me go to 5%. Let me choose 5%, for instance. Then let me enter at the price of 3270. Now this is where you take your stop loss. This is TP, means take profit. If I want to, for instance, I might decide to take profit at $4. Let me say $4, or then this is, or let me make it $4.5. Now this SL means stop loss. Stop loss is if, for instance, I'm entering at 3.270 and market fails to go up, fails to go up, and then starts going back. So I might decide to say, okay, if it starts going down, please close my position at 3.200, for instance, or let me make it 3.150. So it means that if market reverses and go the other way, which I don't want, it will close my position at when it gets to this 3.150. so that is stop loss. So that is that. Always make use of your stop loss because it helps you to avoid liquidation. So this is, remember, we are dealing with cross margin here. Remember, we are still on cross margin. So if I want to enter at 3.270, I will come to this place. Let me remove this for now. Then I've set everything. So look at this very well now. This is maximum long here. This is the margin. This is 5% of my entire portfolio. That's 2.2981 USDT. And one beautiful thing is that I am having a zero liquidation price. So it means that this position can be open till whenever, even if price dips to $1, I am not getting liquidated. So this is one of the secrets, or one of the importance of using cross margin, and then using a low percentage of your portfolio, then with a good leverage. So this is it. Let me see if I can adjust this leverage and see if there will be a change in my liquidation price. There is no liquidation price yet. Let me see if I can also increase it again. Let me make it 20 and see if there will be. There is none. So there is none, but you discover that my margin is changing. You will discover that my margin is changing. You will discover that my margin is changing. You will discover that my margin is changing. So it is good that you use low leverage. Also, at least don't allow greed. So this is 2.4 USDT. So when I click on long, this is order confirmation. This is the analysis. I am using 15x on cross margin, and this is the price at which I want my order to be triggered. This is my margin here, margin to be used. And the beautiful thing is that I am having a zero liquidation price. 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 So if I click on buy, it will enter into order book. So I am having an open order. This is my open order. This market will only trigger when the price of thrice gets to this price, 3.27. So that is when it will trigger, and you will see it here reading. You will see it here. This is when it will enter into position. It will enter into position here. So because it has not triggered, I don't have any position yet. So that is that. So You have to note that very well. Now let me show you the difference. You discover that I have zero liquidation price, but if these were to be in cross margin, I will in isolated margin, sorry, I would have a liquidation price. So let me change to unable, because I already have a position. So let me close the position, cancel. Let me cancel the position. So let's go to isolated margin. You will see the difference. So now we are in isolated margin. Let me choose 5%. Let me choose 5% of my portfolio and see what happens. Good. You will discover that beautiful. You will see that this is my margin. I am entering. This is 5% of my portfolio, 2.4123. Now look at the difference. In cross margin, I didn't have a liquidation price because I was using a low percentage of my assets, and then I'm using a low leverage too. But here I am having a liquidation price which is very, very closer. So it means that if this coin, if I should enter this trade and this coin gets to $3, that's 3.068, I will lose this $2.4. Now the difference is that I will only lose this 2.4. I will not lose outrightly my other leftover in my futures account. That's the only difference. But in cross margin, if I'm losing, I am losing both the entirety of my fund. But here I am having a liquidation price. So that is the major difference. That is why I so much prefer cross margin. So people might have their own reasons for using isolated margin. I do use it sometimes. So there is another way to manage isolated margin. You can add up margin. You can keep adding. If you are at the risk of getting liquidated, you can keep adding up USDT to increase your chances of not getting liquidated. So that is it, guys. So you have to note this. Already Thrice is making movement. So let me just open a quick position and see how it goes. It's just a test run for this video. So let me click here and let me enter at current market price with just 5%. Let me switch to cross margin. I am switching to cross margin. So this is cross margin. So you can see I have zero liquidation price here. I'm having a zero liquidation price. So let me trigger this order. Okay, let me make it 329. Let me place this position, buy long. So you can see it has entered order book. I told you about order book before. You can see my order here. You can see it here where you have the dots. Let's wait for the order to trigger. So it is already in the order book. So this is it here. Let's wait for it to trigger. Let's wait for it to trigger and see where it heads to. Okay, so the order has triggered. As you can see, if you look very well, you will see that the price has gone below my entry price, and it is already reading. This is, if you look very well, this is the price at which I entered. This is the price at which I entered. I entered at 3.329. So, and this is the current price. That's the fair price, and this is my margin. This is the margin. So another important thing to note is that I have zero liquidation here. You can see it here, zero liquidation. I have zero liquidation price. So, and you can see that I am on cross 15x. So if remember, I did not set my TP, that's my take profit or stop loss, when I started the setup for the trade. So if you still want to do that, you can click here, you click on this place to add your TP. So you agree. Once you agree, I understand, and then you'll be able to impute your take profit. This is your take profit and this is your stop loss. So you set them if you want to. So it is very necessary. It is very necessary to do so. So that is that for that, guys. So if you have any question, please always drop a comment to or drop a DM so that